Hello, guys. Welcome back to the show. Thank you for coming back here. Thank you for joining me. I hope you're pumped up. I hope you're ready to go. And we're building wealth one investment at a time. Anyway, guys, so I want to thank you again for coming on. Let's talk about a bad day in the stock market, guys. And that is why it says we need that hedge on oil. You need to buy oil stocks unless China is open, unless inflation is down, we're going to have some problems. So we want to be buying those oil stocks. So that's how you get those nice dividends. So we will be talking about these oil stock. I am encouraging you to buy some oil stock. I'm encouraging you to buy stocks like Pioneer. I'm encouraging you to buy stock like Chevron, Devon, all these stocks that give this high yield, and still be on the lookout for tech companies like Nvidia, Apple, Google. We'll be discussing all these stocks as we go forward, but I want to start, as I always do, with Jim Cramer and Jeff Marks from the CNBC Investing Club. And I want to take the opportunity again to tell you to join the investment club if you have not done so. So let's go to Jim Cramer and Jeff Marks from the CNBC Investment Club.
On a very nasty day, as we can tell, for, of course, club members know this is the end of one miserable quarter and a miserable first half. And I've got to tell you, Jeff, I think if we don't take advantage after the cash that we just raised and putting some money to work today, we are going to sorely regret it.
Yeah, good riddance to the second quarter, right? And this first half of the year. Worst for the S&P since 1970. But to your point, Jim, we have been raising a little bit of cash recently. We got it back up to 7 after taking it to some of the lowest levels that I can really remember.
Take the lowest levels in years, and then as the market rallied back, we sold some. And the reason why we do that, this is just good portfolio management, people, is so that we would have an opportunity to buy things that we like that have come down that we think can go up a lot that help our basis, which brings me to Procter and Gamble.
Right. Profitable company, good balance sheet, very recession-proof.
Thank you.
We get
there it is.
Very recession-proof, has a nice dividend yield. Down slightly today, but look, the whole market's down, obviously. But again, when you're worried about a recession, you don't really have to worry about Procter because these are the products that everyone just needs to buy every single day.
Okay, so why today? What has made things different? So yesterday, General Mills reported a quarter that was really quite good. And in it, they said the supply chain problems have diminished, okay? They're much better than they were. Procter had supply chain problems. The dollar looks to me is peaking. That has hurt them. So it would be good to have that down. The if oil prices don't seem to be going up that much more, that helps them. The surfactants, their chemicals have rolled over. So in other words, what I'm saying is the raw costs are coming down. Their sales, there's been absolutely they're not elastic. People stick with the brand, which means that I think that this can start going up. We bought some at a very good price. And now it's time to buy some more.
And you'll be safer in a Procter than versus more of a discretionary category,
which has been the worst,
like an RH, Nike. It's been a tough week for retail. Nike, RH, Bed Bath and Beyond, all very difficult. RH, of course. Right. You said earlier in the week, be on the watch for pre-announcements, and RH.
And there we go. RH did it, and I think it's starting now. Tonight is going to be more bad news, I believe, which is Micron. A lot of people have been selling all the semis ahead of Micron. I think it's interesting. I spoke to Jensen Huang yesterday, who, of course, is the CEO and founder of NVIDIA, and they are pivoting very aggressively to being artificial intelligence, industrial, omniverse. The fact that it means nothing to people is a little irking to me because NVIDIA remains, in my book, the best cutting-edge company. Now, remember, we sold a lot. We have the smallest NVIDIA position I can recall, maybe in 7 years. And I am so itching to buy NVIDIA, but I see it. You see it. I'm not an idiot. We don't get in front of a speeding train here, all right? We know that people want to show that they didn't own NVIDIA and they didn't own AMD, even though I have the most up-to-date information about how they're doing. But you know what? Just because you have updated information about how they're doing does not mean that you should stand in front of the freight train. So NVIDIA can go down all at once. We will buy it lower. AMD, look at this, cut in half. Okay, cut in half. I saw Lisa Su 2 weeks ago. That everything is on target. That means that you've got stocks that people do not want to own. You do not take, this is good portfolio management, You do not take a clown out of his or her stock. You let them sell until they exhaust themselves, and then you pounce, whether it be at 69, whether it be at 65, or whether it be at 74. We will find the level and tell you when we want to buy back with NVIDIA, with AMD, stock that we sold. This is really important that you've got to understand this. We wait. When we sold high, we wait until we think that the sellers, whom we think are stupid as wood, finish, and then we buy.
Well, look, I feel like you can almost say that too about Constellation Brands today.
Yeah,
they reported
morons.
This morning. A really strong quarter.
Fantastic.
Nice earnings beat. Of course, they did maintain their full year guide, but management tends to be conservative. Now, we did get some news about the share structure. They are going to. They made a deal with the Sands family. It's at a 26.5% premium. Now, the Sands family initially wanted a 35% premium. So they were able to negotiate.
But remember, we don't want the Sands family in there. We want the Sands family. We want this. If they want to take over, want to sell the company, I know justice is very hard. You needed to get the Sands people out of there. So why anyone thinks this is bad is beyond me.
I think people may be looking at that premium and saying, well, look, they're paying a big price. But to your point, it is so much better from a corporate governance standpoint to have a single class structure, a reduction in voting power. The Sands family had total control not total, but a majority control of the company. So good there also. And investors don't like so there's a group of investors that don't like buying stocks with two class structures.
Right, and they can come into
reducing
this.
it to one is positive. It increases
now
the
you take a look at this. This is so first you have to look at how they do beer. It was sharply better than expected. It was really
beer
amazing
numbers were great.
And then you say, okay, what did they do to collapse the Sands family stock into the A stock? The answer is they paid much less than we thought. So you've got the two positives. This just shows me once again the ennui of the stock market. Two positives in this, and it still goes down. That means, again, wait until they're done selling and then buy. How do we wait? How do we know that? Well, a stock tells us when they're done selling. Because what happens is that it goes down, and then at the end of the day, it stops. And if it opens up the next day and doesn't go down, that's when you buy.
And you have the CEO on Mad Money tonight.
Yeah, Bill Newlands on tonight. He's going to tell you this.
Confusion. Yes.
You know, he's going to say exactly what I just said, which is beer's fantastic, which it is. And they got a good price for the Sands family. So, I mean, these sellers, and I respect sellers. I always do. I mean, but let's say you sell this thing down 15. Here's what this is about. That person thinks it's going to be down 20, right? So that person wants to get out ahead of the guy who's selling down 20. Does that person even think about the fundamentals? No. But we do. And we're not going to suddenly change our minds because someone who's not as smart as we are is dumping stock. We have the best information. Now, let's go to another one that people are selling that is just part of a cohort, Qualcomm.
Yeah, it's interesting today because we had that important rumor from a big Apple analyst who said Apple is struggling with some of their 5G modems to develop it internally. They're going to have to go back to Qualcomm for their next generation phones. Morgan Stanley, they said the same thing. They said, look, based on their industry reports, it confirms that Apple may have some problems here, and Qualcomm could retain full share, which would be a nice earnings boost for them.
11 times earnings, okay? And you're getting a dramatic increase in the E. Remember about how stocks work, okay? You have the price, okay? You have what people are going to pay for the multiple. We always like to say solve for M, okay?
And those multiples have been coming down because the Fed has been raising interest rates.
So what I'm willing to say is that the multiple will go up and the earnings estimates will go up, which will yield a higher price. Now, you might say, well, wait a second, Jim. Doesn't this say it's just going to do nothing but go down? Well, what we're looking for when this quarter's over is an inflection point. The inflection point will come when the Fed has raised enough that it's very clear that inflation not only has peaked, but is going down, and it's going to be an inventory recession, not a jobs recession. I know that he wants the jobs to come down, if only just because there's not enough labor. But that could be solved by immigration, by the way. But I think that we're further along in what looks to be a recession than people realize.
Well, and then, you had the PCE data. That's a core measure of that's what the Fed looks at for inflation. That came in a little bit lighter than expected, down from the previous month. And between that and some of the off the charts that you had last night with Carly Garner, on commodities, maybe
including oil. She does think oil goes up one more time. So remember, we're still long a lot of oil. We're getting another chance. That is our hedge. Remember, that's a hedge against flow. Finally, if you ask me at the end of this quarter, obviously, which stock is the cheapest in the portfolio, I will say Disney. Now, Disney was also the worst performer in this quarter. And we've been buying Disney all the way down. Now, you can say, well, wait a second. Why are you doing that? Because we think the franchise is worth a lot. Now, look, and by the way, I could show you 300 charts that are like this. I mean, I'm not. But what the difference with this Disney is that now you're getting it because of Netflix, I believe, without the value of Disney Plus, without the value of ESPN Plus. You're really just paying the price for the theme parks and the cruises now. Forget the library. And I just think that that's foolish. I know that a lot of people think that Bob Chapek isn't strong. I spent enough time with Chapek to know that he runs theme parks better than anyone, and that is going to be the bedrock of what's going to move this quarter. So anyway, for Jeff Marks, this is Jim Cramer, finishing up one lousy quarter where I should have presented a lot of the better ones we did, but I wanted to give you the ones that are down so you know exactly how we're feeling. And what can I say? Good riddance to this quarter. Thank you.
Anyway, guys, welcome back. Thank you for that. I hope you learn a lot. I hope you enjoy that program. Hope you get your coffee or your tea or whatever you need to get to rejuvenate after that. So if you're in the stock market and things are down, I want you to keep holding on strong and wait for the bounce. The bounce is going to come. And I still believe oil is the best stock. I still believe oil is a great hedge. And I still believe it's the best way to go. So let us talk about some oil stock. I'm going to talk about some oil stock with you. I don't have a lot of time. I don't want to keep you too long because I appreciate the time you spend here. And just remember, we're building wealth one investment at a time. So we're going to talk about two oil stock I'm going to share with you tonight. And I'm going to start by actually doing this right now. So guys, let me tell you this just before I start, that if you have not joined Robinhood, please consider joining them. And you can use my code. Let me just share that with you. Here, I'm going to leave it here, which is Ernie B123. Join that robinhood.com, Ernie B123, and you will get a free stock when you join. So I just wanted to share that with you before I go and talk about my two oil stock that I think you should be buying right now. I think they're low enough and they give great dividend. So the first one I'm going to share with you guys, I'm going to talk about Chevron, guys. It's a company that a lot of people know. They give a 5% dividend, guys. So consider buying Chevron. It is a very good company. It's a very good company to get started with. So continue buying some Chevron as you move forward and build wealth. And I said before, the oil company is directly linked with inflation. So if you believe the economy is down, keep buying oil and you get that nice dividend every couple months. All right, guys. So let's come back here. And as I said, I'm going to put the link down. So I'm going to remove the link for now, but I'm going to put it down in the description, guys. So let us talk about another company, which I believe in. I've been talking about that company for a while, and I think it's worth mentioning it again. It's down now. It is Pioneer Natural Resources, guys. So as we ending up the month of June, that is a good hedge against oil. There's still some oil stock that I wouldn't share now, but I could talk about Corsair right there is good. And I said NVIDIA is good if you get to believe that China is going to open. You could consider buying stocks like NVIDIA, AMD, Google, which should be splitting very soon. So guys, look at your portfolio. Look at companies that you know are strong companies that's going to be around. And I want to thank you for joining us here tonight. And hey, please don't forget to comment and subscribe if you're finding value in this. And we'll see you tomorrow when we talk more stocks. Let's just see what's going to happen in the market. And I will definitely bring you all the good information. So please don't forget to comment and subscribe to my channel.